So 13.60 to 20 Rand is a solid upside. Of course, this is if it happens, not to say that it will happen.
Quick announcement for those who are interested: the interest rates in South Africa. Hello everyone, and welcome back to another FinMeUp Stock Spotlight, where we cover the most important stock market news with some extra insights. So today we'll be looking at Netcare, Sibanye, OpenAI, Nvidia, and Binance. Paul, Netcare, this is a company that you follow. Their revenue grew by 9.5%, EBITDA grew by 14.5%, operating profit grew by 19%, and the profit for the year grew by 27.2%. Looks good results from the outset, but you follow this company. What insights can you give us?
Yeah, Higgo is one of my babies. Netcare, after my stock savvy episode or deep dive episode now with Christian Botma. So Jonte, maybe you can link it up here. It's a very nice conversation I had with Christian Botma, also one of his biggest stocks. I was a little bit early looking at the share price. It's down about 5% for the year. Of course, you do get a juicy dividend. So given that it's basically flat, but I don't want to chase flat. I want to make some money. So maybe a little bit early, but still very happy with the results. The last 5 or 5 days, it's up about 5-6%. So the market kind of liked it, and I also liked it. I'm encouraged by the numbers. So what's happening at Netcare? Firstly, the IT project that they rolled out with the nurses. All the nurses have like iPads now, where all the medical records are now electronic. So finally, it's a big step in the right direction. So that's finally live, and it's rolling out as we speak. And the results are positive thus far. They've tracked nicer positive efficiency changes. Next, from a volume perspective, yes, the people so it's the actual people in the hospitals, the patients, it is also up, and that's good to see. Especially given Life Healthcare, which is one of the big competitors. They went super aggressive this year with their pricing. So basically, we're not going to increase our prices. Maybe we're even going to decrease our prices in an attempt to win market share. It's almost like, all of a sudden, Pick n Pay says everything is down, like Black Friday, 20%. So in an effort to get more people there, where Netcare maintained kind of their price structure. So it's not putting war against each other, and it's like market share at any cost, because the problem then becomes, okay, now my hospital is full, but I'm not making any money. So you have to keep your profit margins at a realistic level, and that's what they've done. I like that. Lastly, they bought back shares. So I think they bought back shares at around 13.20 Rand. It's now 13.60 Rand. So great move in my opinion. The management believes that the share price is undervalued or cheap. And like we always say, that's always a positive sign. So looking at next year, I think the company will continue to increase earnings and free cash flows and all of the valuation metrics that we use, the discounted cash flow model. I see it at around 20 Rand, also given a juicy dividend. At the moment, it's around 13.60 Rand. So 13.60 to 20 Rand is a solid upside. Of course, this is if it happens, not to say that it will happen, but this is what I think. And then the downside, I think, is pretty limited. I can't see us going below like a 10 Rand or so. So from 13.50 Rand, downside is about 30%, but the upside is way higher. So yes, overall, Higgo, this is not a blow your mind tech stock that's gonna go to the moon and back over the next year. It's a hospital. It's boring, but I'll never forget the quote from Charles Botha, where he said, a Rand made from a boring company, like in this case a hospital, a Rand made from a boring company is exactly the same as a Rand made from AI. So just remember that whenever you invest in stocks. It doesn't matter what you invest in. It can be boring, it can be exciting. What's the price now? Where do you think it will go? And that's exactly the same story every single time.
Yeah, sometimes boring is best. And especially if you look at Netcare, hospitals will always be there. Same as retailers. Like where you buy your food will always be there. But the thing is, who's going to get the most market share and who's going to optimize and utilize what they have the best and expand even. If you think about Checkers, Pick n Pay. Checkers dominating, Pick n Pay losing market share, Checkers increasing market share. Same with Netcare. It's, there's always going to be a demand for it, but who's going to gain the market share? Who's going to optimize the systems better? Who's going to, leverage everything that they have better? It looks good results, and excited to see if everything comes to tuition that you mentioned, Paul. Next company, Sibanye. So they announced the launch of a $500 million senior unsecured guarantee convertible bond. which is due in November 2028. The proceeds will be utilized to advance the group's growth strategy. That includes the funding of the recent Raldan acquisition. And the Sibanye shares were down close to 20% when they announced this. Sibanye has not had a fun time in the market the past year at all. And I know it's a FinTwitter favorite, and usually when people invest in a mine, especially on the FinTwitter community, then it is Sibanye. But the shares have been hammered. Almost all commodity plays have been hammered over the past year. What do you make of this? And maybe you can just give us some insights on what this actually means.
Yes, Sibanye, I always feel like I'm the Sibanye hater here. Many of the Stock Spotlight episode we've covered Sibanye, and so I'm not a hater. I know a lot of people actually own this company. I don't want to be that guy, but it's not without reason. So there's a few small reasons, and then there's two big reasons why the stock is where it's at. For the smaller reasons is the CEO buying into high, like things like lithium and so on. In the US, they have struggling operations, so you never want to see your company struggling in such a great economy. But then the two main reasons: firstly, the underlying commodity. So they are sellers of platinum and palladium. That is the two main ones. Also gold, but mainly platinum and palladium. And they operate on a very tight margin. So if you operate on a tight margin, the price of the thing that you are selling, in this case platinum and palladium, movements in that product or this commodity, I'm going to say this spurts the company is very sensitive to movements in this commodities, and exactly what happened. So the prices of both these commodities decreased quite significantly. I think if I look, John, you can maybe put it on the screen, but both of these commodities are down a lot, which means that Sibanye is significantly impacted. And just maybe a quick 30-second nugget. So let's say you buy something for 10 Rand. That's your purchase price. And you sell it for 12 Rand. 10 to 12 Rand, that's a 20% profit margin. Now this thing in the market goes from 12 Rand to 13 Rand. So only 1 Rand up, from 12 Rand to 13 Rand. All of a sudden, you're still buying at 10 Rand, but now you're selling at 13 Rand. So your profit margin went from 20% to 30%. And just think about this, from 20% to 30% is a 50% jump. From 20 to 30 is a 50% jump in earnings. And then you release results and everyone is buying the share and it's going crazy. But the opposite is also true. That 12 Rand dips to 11 Rand. That's a massive difference in your profits as a company that's operating on the high end of the cost spectrum. So that's one main thing. And then the second thing, Higgo, is the reason why everyone is basically losing it is this whole new bond that they issued. So let me quickly explain to you how it works. So if you raise money in a company, there's two ways. The first one is doing it via issuing shares. So you're selling shares to people as investors, giving away a little bit of your company. The second way is that you raise debt. So you go to the banks or wherever and someone just loans you the money. Now, which is better? Normally, if you ask people this question, it's normally like, obviously shares is better because we don't want to, get debt. We don't want to go into debt. But actually the opposite is true. Normally, almost always, it's better to acquire debt because if you sell shares, you are giving away your company and, very important, you are diluting current shareholders. So if you're a shareholder and you own 10% of the company, now they're selling shares to other people. All of a sudden, now you only own, let's say, 6% of the company. And you never want to see that. Also, the earnings per share. So if you make the same amount of money, but you have more shares, so the earnings per share then goes down. So what they did now, they did kind of a combination of it. They issued what we call a convertible bond. So a bond is debt, which is good. We want to see you going to debt rather than selling shares. But now it's a convertible bond. And this convertible bond means that the people that basically borrowed them, lend them the money, they can, instead of Sibanye having to pay them back, they can ask them, okay, instead of paying us back, rather give us some of your shares. So actually what they're doing is they're issuing shares, but it looks like they're issuing debt because somewhere along the line, these people will say, I borrowed you 100 Rand, I lent you 100 Rand, you don't have to pay it back, rather give me 100 Rands worth of shares. So it's in my opinion, it's sort of delaying the inevitable. And it's a massive dilution because $500 million is a lot of money. Not 500 million Rand, $500 million. And what did the market do? They hated it. It's down 20%. It was down 20% on the day that it was announced. So let's see where it goes from here. But in my opinion, something like a Northern is a much better play if you want to play the Palladium game than Sibanye.
So Paul, just for clarity, that's a great explanation. So basically, they took out the debt, to grow the business instead of doing equity. But if they don't pay back the loan, then it converts into equity. Is that correct?
If they don't pay back the loan, yes, then it will be converted, or somewhere along the line, if they would choose to do that, if it hit certain targets or whatever, then they will convert the debt into equity. It will a massive flood of shares into the market, and everyone will be diluted. And of course, markets are forward-looking, meaning that if you expect to be diluted in a year's time, then of course you're going to sell already today because you see what's coming. So that's exactly what happened.
That's a great explanation. Thanks, Paul. If you want to make the rest of your finances as simple as he made this complex topic, you can book a call with Paul free of charge and ask him for insights, chat to him like we're chatting here. It's always great learning from him. Just a quick announcement for those who are interested. The interest rates in South Africa stayed the same. They didn't go up, they didn't go down. The day before the interest rates were announced, we saw that inflation just rose a little bit again in South Africa, which is not great. And that's probably why they decided to keep it the same and not bring it down. We were looking for some relief, but it hasn't happened yet. But hopefully it will happen in the next few months and even years. So on to some bit more drama. And that is OpenAI and the entire Microsoft and everything that's happening there. So Sam Altman, which is obviously one of the key founders and also the CEO, or he was CEO, then he got fired by the board. A massive shock to everyone because nobody expected it, not even their largest investors. That happened on the Friday, late afternoon. By the Monday, he was hired by Microsoft, which is big investors in OpenAI. So just OpenAI, they own ChatGPT and DALL-E and various other AI things. So ChatGPT is obviously the main one. On Monday, Microsoft hired OpenAI's previous CEO, which is Sam Altman. And later, I can't remember if it was the exact day or the next day, OpenAI rehired Sam Altman. So it's basically what happened with Steve Jobs in Apple, but where Steve Jobs, it took a few years, but this took like a month. What do you make of this, Paul?
No, it's crazy at the moment. Again, it's actually so important in my opinion because, like Elon Musk rightfully said a few times, OpenAI it's a bot, yes, and it's a unbelievable productivity tool, but it's trained by people. The problem is that you're not being objective. The chatbot isn't objective because if it says, yeah, but if this happens, should we vote this party? Let's say you do that. And because it was trained by people, then the people can kind of give you, can kind of nudge the OpenAI, nudge the bot in a certain direction, which we don't like. So that's why Elon Musk said, like, okay, there's going to be a truth AI, and there's a one that Twitter is going to come out, like a release now called, what's it called again? Can you remember?
Grok.
Yeah, Grok, something like this. So in my opinion, OpenAI can potentially, and it already has changed the world. So steering this thing in the right direction is crucial for the future of how we do things and how we operate. So it has to go smoothly. And so I'm holding thumbs that this thing actually goes in the right direction.
Yeah. I mean, part of AI is why one of the companies have been just doing incredible things is Nvidia. So obviously for AI to take place, there's a lot of computer things happening. It all boils down then to semiconductors. So obviously data centers are important, semiconductors are important, all of these things, and that's when Nvidia is operating, and they are ahead of their competitors. That's why they are now the supplier of choice for companies like Microsoft, and the demand is so high. So Nvidia's revenue was $18 billion, which was almost a 5x, like a 5x from the previous year's revenue in the same quarter. The earnings per share was also 6 times better than the previous year. And this is a company of a valuation of $1.2 trillion. So this isn't a small cap where their earnings went from 1,000 Rand to 3,000 Rand. This is a $1 trillion company that posted these results. And it just shows you how much demand there is for AI. And to be honest, I thought they're going to disappoint because I just thought there's too much growth priced into this and they can't deliver this growth because at some point it has to peak. But once again, they just delivered incredible results. They are trading on a PE ratio of 117, which isn't crazy, but it used to be even higher before these results. It used to be, I think, around 200. So if they continue posting revenue figures of increasing by almost sixfold or fivefold, then the earnings is not that high. My only concern is at some point this has to peak a little. So either, like we saw ChatGPT pausing the ChatGPT Plus signups just because demand is too high. So we might see them just like bringing it all together. I don't think it's going to happen. I think the demand is going to continue to rise for AI and for semiconductors. What I do see happening is the likes of even AMD. Sure, they're a little behind Nvidia at the moment, but I mean, if something is working, competitors will catch up, and AMD is just as brilliant. So what I expect to see is competitors catching a little bit up to Nvidia, and that might cause Nvidia's revenue not to skyrocket like we saw now. But incredible company, and it's fascinating to watch this entire space. Like we said many times, Nvidia is so overvalued, but you're going to be very brave if you want to short it. So the next company is also a bit more on the drama side, but it's also something interesting, especially in the crypto space. So Binance, the CEO of Binance, CZ, plans to step down and plead guilty to violating criminal anti-money laundering requirements. This is massive because Binance is one of the top two, if not the biggest exchanges in the world with crypto. And, when this news came out, I was like, okay, I need to go check the Bitcoin price because, it's massive. And Bitcoin and Ethereum, the two biggest, didn't do anything. The Binance token went down a little bit, but it just shows you that how big Bitcoin has become. My parents, they don't know anything about tech. They never even, my dad can't even send an emoji. He doesn't know how. Like, that is where they are. But they are like, they want to learn more about Bitcoin and isn't it a good, so that trend is coming back. And I definitely think we are in a cycle early in probably the bull market cycle again if history repeats itself. My personal strategy with Bitcoin is I know the risks. I know it doesn't generate cash flows or pay dividends, and that it is something like gold or artwork where it has its values. I just buy on a weekly basis because it's impossible to predict the price in 2 days from now or a year from now. It is an interesting space. I know, Paul, you really know Bitcoin. I know you even mined Bitcoin. So you really know the space. What can you tell us about what's happening in the space? Because I even saw there was a person that tweeted a few months ago where he said there's like a checklist of things that needs to happen for the Bitcoin ETF approval. And one of those things was, he said, Binance can't be in the position of power that they are in now. And how this happens, it's almost like, what's going on? What's your 2 cents to wrap this off?
Yeah, okay, I'll quickly give my 2 cents. Firstly, I heard someone say one day, and it is true, in a bull market, bad news doesn't matter. And in a bear market, good news doesn't matter. Doesn't matter if flipping Barack Obama comes out and says he has Bitcoin, that thing is going to go down. And at the moment, we're in a bull market, which means that, whatever happens, people are still going to be positive. The second thing is that markets are forward-looking, like I said. So we kind of, in the crypto community, I know from outside, I'm not sure the non-crypto guys, how they see this, but in the crypto community, we kind of expected this. It's been going on for quite some time. There's a lot of shenanigans with Binance. So CZ has done amazing work in the space, but he did commit fraud, that is true. And he will maybe even go to jail or just pay a massive fine, which is probably the latter is going to happen. But anyway, so that's the second thing. And the Binance price barely moved. Bitcoin and Ethereum is up. Binance is down 4%. And crypto 4% is, I won't say it's another Tuesday. It's like nothing, 0%. So that was quite interesting to me. And the third thing, Higgo, is like we said before, remember, the exchange is not equal to the commodity. Bitcoin is its own thing. Yes, it trades on Binance, but it is not Binance. Bitcoin and Binance is not even close to the same thing. So it's like money versus ABSA. ABSA is not the Rand. ABSA just facilitates the Rand. And likewise with Binance, they facilitate Bitcoin. So you must always remember, yes, crypto has had a hard year with all the scams and so it's filtered with fraud and all of this, but it's still not equal to what the actual technology is. So of course, over time, if this keeps happening, then it will really be bad for the asset class. But at the moment, at least for the crypto boys and the crypto nerds out there, this is like growing pains. This is it will happen in any way, like with any new technology, and eventually it will be filtered out, and we will get to where we need to be. So let's see what happens. But given that this is such a big thing and the price barely moved, I just want to say that keep that in mind, guys. The fact that the price barely moved, in fact, Bitcoin and Ethereum is up. should tell you something about where the market is at the moment mentally.
Let us know in the comments. We don't really cover crypto often. We more investment education and general financial education. Let us know in the comments if you want us to do a deep dive on crypto, but ask your specific questions. It could be anything. So let us know in the comments, and if there's requests, we'll definitely go deeper into that. Hope you have a great day. Thanks for watching. We'll be back next weekend with another stock spotlight. And if you found some value, consider liking, subscribing, and see you soon. Cheers.